Hello everyone, and welcome back to US Tax with Pavan. This is day 4 of our free 60-day course. Today's topic is one of the most important of all, US visa types and their tax rules. Here is something most people never realize. Your visa is not just about immigration. It directly decides how much tax you pay, whether you are a resident or non-resident, and even which tax form you file. Two people can do the exact same job and earn the same salary, yet pay very different taxes, only because of their visa. So today, we will go through every major visa in detail with simple examples. Take your time. This is a long and complete lesson. Let us begin. Let us start with the big picture. Why does your visa decide your taxes? It comes down to 4 things. First, your visa sets your residency status, whether you are a resident alien or a non-resident alien for tax. Second, it decides whether you pay FICA, which is Social Security and Medicare. Third, it controls which tax form you file, the regular 1040 or the 1040NR. And fourth, it decides whether you can even work in the US and for whom. Keep these 4 points in mind, because everything today connects back to them. Now, every US visa falls into one of 2 big buckets. On one side, immigrant visas. This is the green card. These people are permanent residents. They are taxed on their worldwide income. The card is valid 10 years and renewable, and they have a path to citizenship after 5 years. On the other side, non-immigrant visas. This includes H-1B, L-1, F-1, B-1, B-2, and more. These are temporary. For a specific purpose, you must maintain your status, and you are limited to authorized activities. This single distinction shapes everything. Here are the 5 visa families that cover almost everyone. First, employment visas like H-1B, L-1, TN, and O-1 for skilled workers, transfers, and extraordinary ability. Second, education visas, F-1, OPT, CPT, and J-1 for students and scholars. Third, business and tourist visas, B-1 and B-2, which do not allow any U.S. work. Fourth, dependent visas like H-4, L-2, F-2, and J-2 for family members. And fifth, the green card for permanent residents. Today we go deep into each one and its tax treatment. Let us begin with the most famous one, the H-1B, the Specialty Occupation Visa. This is for skilled roles in IT, finance, engineering, and medicine. To qualify, you need at least a bachelor's degree, and your employer must file the petition for you. You cannot file it yourself. The visa runs for 3 years and can be extended to a total of 6 years. For most Indian professionals, the H-1B is the dream visa. Now let us understand the H-1B lottery, because this surprises a lot of people. Every year, far more people apply than there are visas available. So USCIS runs a random electronic lottery to decide who gets a slot. Registration opens in March, and the selected petitions are filed starting April 1st. If you are not selected this year, do not worry. You simply try again the next year. It is partly skill and partly luck. Here are the exact H-1B cap numbers you should know. There are 65,000 regular visas available each year for all applicants. On top of that, there are 20,000 extra visas reserved only for people who hold a U.S. master's degree or higher. So in total, about 85,000 new H-1B visas are issued each year. The master's cap gives advanced degree holders a second chance in the lottery. Now the tax rule for H-1B. H-1B holders are treated as resident aliens for tax, which means FICA applies from your very first paycheck. FICA totals 7.65% of your wages. That breaks down into Social Security of 6.2% and Medicare of 1.45%. And you file the standard Form 1040, exactly like a U.S. citizen. So on H-1B, there is no FICA exemption at all. Let us break FICA into its 2 parts, because the 7.65% you see deducted is really 2 separate taxes. The first is Social Security at 6.2%. This funds retirement, disability, and survivor benefits, and you slowly build credits toward your own future Social Security. The second is Medicare at 1.45%. This funds health coverage for people aged 65 and older. And there is an extra 0.9% Medicare tax on very high wages above $200,000. Now, what does that Social Security tax actually buy you? It is important to know the 6.2% is not simply lost. It builds your benefit eligibility. You need about 40 credits, which is roughly 10 years of work, to qualify for retirement benefits. And here is a nice detail. Your employer matches your 6.2%, paying an equal share on top. Along the way, it also gives you disability and survivor protection. A quick but important note about the Social Security wage base for 2025. The 6.2% Social Security tax applies only up to $176,100 of wages in 2025. If you earn above that amount, no more Social Security tax is taken for the rest of the year. Medicare, however, is different. Its 1.45% has no wage cap at all. It applies to every dollar you earn. Let us make this real with an example. Imagine an H-1B worker earning $90,000 a year. Their FICA is 7.65% of $90,000. So Social Security at 6.2% is $5,580. Medicare at 1.45% is $1,305. Together, that is about $6,885 per year, roughly $574 every month, taken automatically, on top of federal and state income tax. Let us talk about H-1B duration and extensions. The initial approval is for 3 years. It can then be extended once, for another 3 years, giving a maximum of 6 years. Going beyond 6 years is possible only if your green card process is far enough along. And here is a useful tip. Any time you spend physically outside the U.S. can sometimes be recaptured to add a little more time to your H-1B. Now, what about your family on H-1B? Your spouse and children under 21 can come on the H-4 dependent visa. H-4 holders can live in the U.S. and study freely. But working is allowed only with an H-4 EAD, and that permission is conditional. It usually requires the main H-1B holder to have reached a certain green card milestone, like an approved I-140. So H-4 work rights are not automatic. Good news about changing jobs. You are not stuck with one employer on H-1B. The visa is transferable. When you switch, your new employer simply files a fresh H-1B petition for you. And thanks to a rule called portability, you can often start working as soon as that petition is filed. You do not have to wait for full approval. Best of all, a transfer is cap exempt, so you do not go through the lottery again. Here is a behind-the-scenes rule that protects workers, the prevailing wage. Employers must pay an H-1B worker at least the prevailing wage for that job and location. This stops companies from underpaying foreign workers and protects the local job market too. The wage is set by the job title, the level, and the area, using Department of Labor data. It is certified on a document called the Labor Condition Application before the petition is even filed. So how does an H-1B holder actually file taxes? You are treated as a resident alien, so you file the standard Form 1040. You report your worldwide income, just like a U.S. citizen. You can claim the standard deduction on that 1040, which lowers your taxable income. And remember, your FICA is already withheld and shown on your W-2 form, so at filing time you are mainly settling your income tax. Let us quickly lock in the H-1B. It is a specialty occupation visa, sponsored by your employer, and won through a lottery of 65,000 plus 20,000. It lasts 3 plus 3 for 6 years total. You pay FICA of 7.65% from day one as a resident alien, and you file Form 1040. Your family comes on the H-4 visa. That is the complete H-1B picture. Now we move into the world of students. This section covers F1, OPT, CPT, and J1, how international students live, work, and are taxed in the United States. This is especially important for the millions of Indian students who begin their American journey on a student visa. Pay close attention, because the tax rules here are very different and very favorable compared to work visas. Let us start with the F1 student visa. F1 is issued for full-time study at an accredited U.S. college or university. While studying, you can work on campus, but only up to 20 hours per week when school is in session. The visa is valid for your duration of status, meaning as long as you stay enrolled. To work off campus, you need separate authorization, which comes through CPT or OPT. Now here is the big F1 tax rule, and it is a great one. F1 students are FICA exempt for their first 5 calendar years in the U.S. That means no Social Security tax and no Medicare tax during that time. You are treated as a non-resident alien, and you file Form 1040-NR. This rule alone can save you thousands of dollars over your study years. Why does this matter so much? Because you keep the entire 7.65% of your wages that would normally go to FICA. For 5 years, there is no Social Security at 6.2% and no Medicare at 1.45% deducted from your pay, as long as you hold non-resident F1 status. That is real money that stays in your pocket while you study. Let us see it with an example. Say an F1 student earns $25,000 from part-time work. Because they are a non-resident alien, their FICA is zero. That saves about $1,912 a year, which is 7.65% of $25,000. But be careful, the FICA exemption is not an income tax exemption. You still file Form 1040-NR, and you may still owe federal and state income tax. Let us understand the 5-year clock clearly, because the counting is unusual. It is counted in calendar years, not exact days. So even if you arrive in December, that whole year counts as one full year. You stay a non-resident alien and FICA exempt for those first 5 calendar years. After 5 years, you become a resident alien for tax purposes, and from that point, FICA starts being deducted. Now let us talk about OPT, which stands for Optional Practical Training. This is what lets F1 graduates work in a job directly related to their degree after they finish studying. It is usually done full-time. The key point is, you remain on F1 status during OPT, and it is authorized by USCIS with an EAD card, an employment authorization document. How long does OPT last? Every eligible F1 graduate gets up to 12 months of optional practical training in their field of study. That is the standard amount for all majors. 12 months gives you a full year to gain real work experience in America after graduation. But for certain students, there is a way to get much more, which we will see next. Here is the bonus for science students, the STEM extension. If you graduated in a STEM field, that is science, technology, engineering, or math, you can add 24 more months on top of your OPT. So 12 months standard plus 24 months STEM equals 36 months total, a full 3 years of work authorization. One condition, your employer must be enrolled in the E-Verify system. And here is the good news about OPT and taxes. During OPT, you are still on F1 status, so the 5-year FICA exemption can still apply. If you are within those first 5 calendar years, your OPT paychecks have no Social Security and no Medicare withheld. That makes your take-home pay noticeably higher than a comparable H-1B worker. Let us compare with an example. Take someone on OPT earning $70,000. If they are still within the first 5 years, FICA is exempt, so Social Security and Medicare are zero, and they keep about $5,355 more per year. But once they cross 5 years and become a resident alien, FICA now applies, and that same 7.65%, about $5,355, gets deducted from the same salary. Now let us cover CPT, Curricular Practical Training. CPT is a work, internship, or co-op that is an integral part of your degree program. It is done while you are still enrolled, before you graduate. It must be authorized by your school's designated school official, the DSO, and listed on your I-20 document. So CPT is training built right into your studies. But here is a very important CPT warning. If you use full-time CPT for 12 months or more, it can completely cancel your OPT eligibility. That would be a costly mistake, losing your valuable year of post-graduation work. So the safe advice is simple. Keep your CPT part-time wherever possible and protect your OPT. Next is the J-1 visa, the exchange visitor visa. J-1 covers a wide range of people: research scholars, professors, PhD students, au pairs, and visiting doctors. The work allowed is program-specific, tied to the sponsor's purpose. It is sponsored through a designated exchange program, documented on a form called the DS 2019. In many ways, J-1 is similar to F-1, but with some special rules. Let us compare J-1 and F-1 side by side. F-1 is study-focused. It gives FICA exemption in the early years, offers OPT and CPT work options, files Form 1040-NR, and has no home return requirement. J-1 is exchange-focused. It is also FICA exempt in the early years, but it may carry a 2-year home country return rule, meaning you might have to return home for 2 years before certain U.S. visas. Always check your specific J-1 program rules. So how do students actually file their taxes? Non-resident aliens file Form 1040-NR, not the standard 1040. You report your U.S. source income, which is your W-2 wages from on-campus work, CPT, or OPT. Most students also file Form 8843 to document their exempt status. And the deadline is the usual April 15th tax day, just like everyone else. Here is a money-saving tip. Sometimes employers wrongly deduct FICA from a student who is actually exempt. If that happens to you, do not panic. First, ask your employer to refund it directly. If they will not, you can file Form 843 along with Form 8316 to claim that wrongly withheld Social Security and Medicare back from the IRS, so you can recover that money. Let us recap the student section with a couple of bonus points. First, tax treaties. Many countries have treaties that exempt part of a student's income or scholarship from U.S. tax, so check yours. Second, F-1 gives FICA exemption for the first 5 calendar years, saving the full 7.65%. Third, OPT is 12 months, and STEM adds 24, for 36 months total. Fourth, keep CPT part-time to protect OPT. Fifth, J-1 is also exempt early, but watch the 2-year home return rule. And sixth, students file Form 1040-NR plus 8843 and can reclaim wrong FICA with Form 843. Now let us move to 3 more work visas, the L1, the O1, and the TN. These are 3 more ways skilled professionals can legally work in the United States, each with its own special purpose. They are less famous than the H-1B, but for the right person, they can be far easier and faster routes to working in America. First, the L1, the Intracompany Transfer Visa. This is for employees moving within the same company from a foreign office to a U.S. office. To qualify, you must have worked for that company abroad for at least 1 year before transferring. The foreign and U.S. entities must be related, like a parent, branch, subsidiary, or affiliate. It is very common for global firms relocating their staff to the U.S. There are 2 types of L1. L1A is for managers and executives, and it allows a maximum stay of up to 7 years. L1B is for employees with specialized knowledge of the company's products or systems, and it allows up to 5 years. So the more senior, managerial route gives you a longer maximum stay than the specialized knowledge route. Here is a big advantage of the L1. No lottery is required. Unlike the H-1B, the L1 has no annual cap and no random lottery. The employer simply files Form I-129, and large companies can use a blanket L1 petition, which lets them transfer many employees quickly under one pre-approved filing. This makes the L1 a much smoother process for big multinationals. Now the L1 tax rules, and a great perk for families. L1 holders pay FICA, that is Social Security and Medicare, and they file Form 1040, just like other U.S. workers. But here is the best part. Since 2022, the L2 spouse gets automatic work authorization. No separate work permit is needed. The L2 spouse can simply start working. That is a huge advantage over the H-4 spouse. Next is the O1 visa for individuals with extraordinary ability. This is for people at the very top of their field, in science, arts, business, or athletics. To qualify, you must prove national or international recognition. That means evidence like major awards, published work, a high salary, or significant media coverage. It is, essentially, the visa for the most accomplished people in the world. The O1 has two main types. O1A is for sciences, business, and athletics, for scientists, business leaders, and athletes with extraordinary achievement. O1B is for the arts, including film and television. Both run for 3 years initially and can be renewed in 1-year increments. Family members come on the O3 visa, but the O3 dependents have no work authorization. Now the TN visa, the trade visa under the USMCA agreement, formerly known as NAFTA. It lets citizens of Canada and Mexico work in the U.S. in approved professions. It is a fast, streamlined route built specifically for North American professionals. It was designed to make it easy for skilled workers to move across the borders of these 3 countries. But here is a crucial eligibility warning about the TN. It is for Canadian and Mexican citizens only. Citizens of India and all other countries are not eligible, no matter their profession. So if you are from India, the TN is simply not an option for you, and you should look at the H1B, L1, or O1 instead. I am highlighting this because it confuses many people. Let us look at how the TN works in detail. 1. It covers specific professions only, like accountants, engineers, scientists, and lawyers, on the official USMCA list. 2. There is no annual cap and no lottery, far simpler than the H1B. 3. It is issued right at the port of entry. Canadians can often apply at the border. 4. It is valid 3 years and renewable indefinitely, as long as the job continues. 5. TD dependents can join but cannot work. And 6. TN holders pay FICA and file Form 1040. Now let us switch to a very different category, the business and tourist visas. Not every U.S. visa lets you work. The B1 and B2 visas allow short visits to America, but with strict limits on what you are allowed to do. Understanding these limits is critical because breaking them can seriously damage your immigration record. There are 2 of them, often issued together as B1/B2. The B1 is the business visitor visa for business meetings, conferences, training, and negotiations. You attend, but you do not take a U.S. job. The B2 is the tourist visitor visa for tourism, visiting family, and medical treatment. Both are for short stays only. And here is the most important warning about B1 and B2. On these visas, you cannot work, and you cannot receive a U.S. salary. Visits are limited to up to 6 months each. If you work on a visitor visa, you are violating your status, and that can lead to being denied entry or even a future ban. So never, ever work on a B1 or B2. Now we reach the goal for many people, the green card, permanent residency. This gives you the right to live and work permanently in the United States for any employer, anywhere, with a clear path towards citizenship. Unlike every temporary visa we have discussed, the green card is about staying for good. Let us understand it and its taxes in detail. Here are the green card basics. It is officially issued as Form I-551, your permanent resident card. It grants permanent residency, meaning you can live and work anywhere in the U.S. for any employer. The card is valid for 10 years and is renewable, though your underlying status does not expire. And it opens a path to citizenship after 5 years of permanent residency. Now the green card tax rules. Green card holders are taxed exactly like U.S. citizens. You pay all taxes from day one, both FICA, which is Social Security and Medicare, and federal income tax. There is no exemption period like students get. And you file the standard Form 1040 every single year. So with a green card, you have full taxpayer status from the very start. And here is a very important green card rule. You must report your worldwide income. That means not just the money you earn in the U.S., but income from everywhere. It includes foreign salary, rent, and investment income from your home country. For example, if you own an apartment back in India and earn rent on it, that rent must be reported on your U.S. tax return. This surprises many new green card holders. Let us not forget the families, the dependent visas. When the main worker comes to the U.S., their spouse and children under 21 can join on a dependent visa. Each work visa has its matching dependent visa. H-1B goes to H-4. L-1 goes to L-2. F-1 goes to F-2. J-1 goes to J-2. O-1 goes to O-3. And T-N goes to T-D. So every primary visa has a family version. But can these dependents work? The rules vary a lot. The L-2 spouse is the best case. They get automatic work authorization, no extra permit needed. The H-4 spouse can work only with an H-4 EAD, and only if the H-1B spouse meets certain green card conditions. And the others, F-2, J-2, O-3, and T-D, generally have no work authorization at all. So if a working spouse matters to you, the L-1 and L-2 combination is very attractive. Let us quickly recap this section. The L-1 is for transfers within a company. The O-1 is for extraordinary ability. The T-N is for Canada and Mexico citizens only. The B-1 and B-2 never allow work. And the green card means you report worldwide income and pay all taxes from day one. Keep these straight, and you understand the heart of U.S. visa taxation. Now let us tackle a concept that confuses almost everyone. Are you a resident or a non-resident for tax? Here is the key insight. Your visa label does not directly decide this. Your number of days in the U.S. does. A tax resident and a non-resident file different forms, get different deductions, and are taxed on different income. So let us learn exactly which one you are. This is decided by the substantial presence test. The IRS simply counts the days you were physically present in the U.S. Roughly, it is 31 or more days this year, and about 183 days counted over the last 3 years, using a simple weighted formula. If you pass the test, you are a tax resident. If you do not, you are a non-resident. And students on F1 and J1 get exempt days for their first 5 years, so they usually stay non-resident. So who is which? Tax residents file Form 1040. This includes H-1B, L-1, and O-1 visa holders, and all green card holders. They are taxed like a U.S. citizen and report worldwide income. Non-residents file Form 1040-NR. This includes new F1 and J1 students. In their first 5 calendar years, they are taxed only on their U.S. source income. That is the core difference. Let us compare the two forms directly. Form 1040 is the standard return for tax residents, that is H-1B, L-1, O-1, and green card holders. Form 1040-NR, where NR means non-resident, is for new F1 and J1 students. The two forms look similar, but the rules, deductions, and credits are different. And remember, which one you use depends on the presence test, not just your visa name. Here is a costly common mistake to avoid. Filing the wrong form is one of the biggest errors people make. A non-resident student who wrongly files a regular 1040 might claim credits they do not actually qualify for. That can lead to IRS notices, penalties, and amended returns later, a real headache. So always confirm whether you are a resident or non-resident first before you file. Let us revisit the 5-year FICA exemption as a clear timeline. 1. F1 and J1 students are FICA exempt for their first 5 calendar years. No Social Security and no Medicare. 2. Since FICA is 7.65% of pay, this is real money saved during your studies. 3. After 5 years, you usually become a resident and FICA starts. And 4. If you move to an H-1B, FICA applies from day one with no exemption. A reminder about worldwide income, because it is so important. Green card holders and tax residents are taxed on income from everywhere, not just the U.S. Rent from a flat back home, foreign interest, foreign dividends. All of it is reportable. Foreign accounts may also need extra forms, like the F-bar or FACA reporting. Non-residents, however, like F1 and J1 students, only report their U.S. source income. Let us list the common mistakes. Part 1. The first mistake, using the wrong tax form, filing a 1040 when you should file a 1040-NR, or the other way around. Always confirm your status first. The second mistake, paying FICA while you are still exempt in your first 5 years as an F1 or J1 student. If this happens, you can reclaim it, first from your employer and then from the IRS. And the common mistakes, Part 2. The third mistake, working on a B1 or B2 visa. These are visitor visas, for visits only. Any paid work is not allowed, and it risks your future visas. The fourth mistake, using full-time CPT for too long. 12 months or more of full-time CPT can make you lose your OPT eligibility, so track it very carefully. Let us put it all together in one big comparison. F1 and OPT, in the first 5 years, are FICA exempt, have limited work rights, and file 1040 NR. H1B, L1, and O1 all pay FICA, can work fully, and file Form 1040. The TN, for Canada and Mexico, also pays FICA and files 1040. B1 and B2 have no FICA and no work allowed. And the green card pays FICA, works freely, and files 1040. One table that captures the entire day. Now let us review the key takeaways from today. 1. Visas are either immigrant, the green card, or non-immigrant, temporary. 2. H1B, L1, and O1 pay FICA from day 1, work freely, and file Form 1040 as residents. 3. F1 and J1 students are FICA exempt for 5 years, usually non-resident, and file 1040 NR. 4. OPT is 12 months, and STEM degrees get 36 months total. 5. B1 and B2 are visits only, no work, and TN is for Canada and Mexico citizens only. 6. Dependents include H4, L2, F2, and J2, and L2 spouses can work automatically. 7. The green card means all taxes from day 1 and reporting worldwide income. And 8. Always file the correct form, resident 1040 versus non-resident 1040 NR. Now let us test what you have learned with a quick quiz. Question 1. For how many years are F1 students FICA exempt? Take a moment to think. The answer is 5 years. Question 2. Which visa pays FICA from day 1? Is it H1B, F1 student, J1 scholar in year 1, or B2 visitor? The answer is the H1B. Question 3. Which form does a new non-resident student file? Form 1040, Form 1040 NR, a W-2, or Form I-20? The answer is Form 1040 NR. And question 4. Can you work on a B1 or B2 visa? The answer is no. These are for visits only. You cannot work. If you got all 4 right, you have truly mastered today's lesson. Excellent work. And that brings us to the end of day 4. We covered every major U.S. visa and exactly how each one is taxed. This lesson was created by Ashamani Pavan Kumar. You can contact me at .pavankumar144@gmail.com. Thank you so much for watching and keep learning. If this helped you, please subscribe to the channel and enable notifications so you never miss a video. I will see you in day 5, where we go deep into SSN and FICA. Take care.